With our technical experts, and Sudip Bandyopadhyay also joins us. So Sudip, how are you approaching this market? एक side tariff, एक side opportunity, right?
Absolutely. Absolutely. And I think, Nikunj, we are forgetting the tariff. It's still a sword hanging over our heads. We will have to see how things pan out. So I'm definitely advising investors to play a bit safe. So focus on domestic themes, focus on, let's say cement. Now, this is as domestic as you can get. There is nothing which can affect related to tariff as far as cement is concerned. Things are improving in the cement. We have to, of course, keep watching the space for volume improvement and pricing power, how it comes back. The cement companies, at least the leading ones, are coming up with good numbers. So that is one segment where I've been recommending buy for quite some time. The other space where we have been positive is construction, infrastructure. I think Government of India is committed to spend about 11 lakh crore in this current fiscal. So roughly translates to close to about 1 lakh crore per month. Quite a lot of spending. So benefit will definitely go to India-focused infrastructure and construction companies. The last but not the least is power. I think we believe there is a structural positive and structural change happening in the Indian power sector. And this momentum is expected to continue for next 5 to 10 years. Mostly things are domestic. Tariff has nothing to do with it. So focus on the leading power segment players, whether it's the power generators or transmission companies, financing companies, even component suppliers. I think this entire segment will witness a lot of positivity. So if you're building a long-term portfolio, focus on these segments. I'm not talking about FMCG yet. Yes, it is domestic focused, but there are still challenges on demand as we are witnessing that the companies coming out with the numbers and talking about demand challenges still.
Kunal, we are in for looks like a decent close for HPCL, BPCL, Pidilite. Is this entire trade in commodity consumers, especially oil consumers or crude consumers, coming back?
I'll still take it with very on a day-to-day basis.
But ठंडा sound कर रहे हो यार आज.
Yeah.
Like the Nifty.
So it started off Sanda, that's why in the market is Sanda. But any which ways.
I think it's the ice cream conversation during the break which has rubbed off.
I have always wondered that why ice creams in India have not done well. You say that, okay, India is a hot country. And now, just think about it. I mean, India should be having a booming market of ice cream. Why? Because it's a cold country. Refrigerations now have really migrated.
Penetrated, yeah.
But the per capita consumption of ice cream in developed countries versus in India, I think in India is nowhere there. I mean, it is so sad to see that even HUL is looking at selling the ice cream business. And it did not sell, so they had to divest it so that one day somebody else will buy it.
Cola works better, right?
Yeah.
Cola wins in the, cold, what do you call it? Confectionery?
No, it's a carbonated beverage.
No. What I'm talking about is, what do you call ice cream soda category as a category?
Good to work on that. All I know, ice cream is not doing well, and the stock of
sweets are confectionery.
Yeah, sweets and cola is sugar water. Let me put it this way. So whatever you want to call sugar water, that's what you call. Yeah. No, but Varun Beverages, it is one of the most expensive bottlers in the world. Because you have levels of the bottling companies in Turkey, bottling companies in other countries, and Varun Beverages is right up there. And now there's another interesting disruption which is happening there, is that Campa, which is owned by Reliance, is slowly but gradually eating into market share. 10-12% market share has been eaten by Campa already.
So ice cream is considered a type of confectionery. I was right. But yeah, we should ask Sudip Bandyopadhyay why ice creams actually don't work well in India.
I think, Aisha, it's pretty much the issue of affordability. The ice cream per cup or per scoop comes at a much higher valuation compared to many other, quick hit sugary content. Like you talked about cola. I think cola nowadays, of course, there's a huge competition. Everybody is introducing product at 10 rupee segment, 10 rupee block. So it comes much cheaper, where ice cream is expensive. I think that's one explanation which I can logically think of why ice creams don't work as much as it should work, considering we are a warm and hot country. It does work very well in West. which are by and large cold climate. But somehow, we still prefer to drink tea, coffee, or go to cola.
Sudip, from a market standpoint, the geopolitical flare-up, is this something markets are prepared for, or markets are assuming that nothing will happen? And if something happens, then what will be the automatic downside?
Nikunj, the way the market is moving, I think market is not factoring in any major flare-up. One doesn't know whether that's going to be the reality or not. And if there is a major flare-up, of course, it will be a significant negative for the markets. There will be panic, at least initially, if there is a significant flare-up. That much I'm pretty much sure. Because by and large, we've been talking to multiple participants, both domestic as well as international. And, I don't think this geopolitical flare-up between India and Pakistan is in the radar. They're talking about tariffs, they're talking about multiple other things, growth slowdown, demand slowdown, but nothing about geopolitics as far as India-Pakistan is concerned.
Just one of those days where you would say, Thanda hai. And that's what you would say, Thanda hai. But, this is coming on the back of what, almost a 7% rally?
Yeah. 2,000 point rally approach.
2,000 point, that's approximately 10%. I mean, 8%, which is not bad. And everything has happened in 3 weeks.
Yeah.
3 weeks ago, where we were versus where we are, and where we could be in 3 weeks, that is also different. So my point is that what has changed? Excepting the 90-day window, earnings have not changed. Economy is not changed. Upgrades have not come. The tariff risk are still real. So then what are markets celebrating? What explains this 8-9% surge?
To an extent, I think FIIs have started coming back, and that's one thing which I think has helped Indian markets. Second thing, I think with whatever uncertainty and whatever flip-flop policy making is happening in US, that is scaring investors out of US, and a lot of global investors are looking at alternate opportunities, and definitely India is featuring prominently as far as investable country from their point of view, and that is also encouraging domestic investors, because they are probably expecting a lot of activity from FIIs in the near future. I think this is one thing which has changed between, let's say, 4-5 weeks back, before this Liberation Day, so-called Liberation Day in US happened. Everything started going topsy-turvy after 2nd April in the global economy, US market, and the overall economic scenario globally is concerned. So I would say that's the one change which has definitely helped India. The other significant factor, I believe, is RBI, the way they have handled the liquidity situation. We used to be in a situation where liquidity was extremely tight. From there, we have moved into a situation where RBI has systematically and consciously ensured that there is enough and more liquidity in the market. Of course, interest rates are also coming down. That also does help the cause of equities in India.
Okay, that's the take on the overall market. But Ambuja numbers.
If you like this video, then like, share and subscribe to ET Now.